Tom, if you're ready to go, I think we're set for you.
I'm ready to go.
You ready? Okay.
Yeah.
Well, then, without further ado, I'm going to turn it over to Tom Darden, and he's there with Matt Thompson, I believe, as well. And you gentlemen have a 135-acre piece of land there adjacent to the Raleigh Research Triangle over in the Raleigh, Durham, North Carolina area. So tell us more about that, please.
I live in Raleigh, North Carolina, in the Raleigh-Durham region in Raleigh, North Carolina, which is part of the Research Triangle area. The Research Triangle actually consists of 3 different cities: Raleigh, Durham, and Chapel Hill. And it happens to be, according to ULI, the greatest real estate market in the United States right now. It's consistently ranked, if you read the business press, as the best place to start a business, best place to raise a family, best place to live, or at least one of the best in the United States. So I've been operating real estate private equity funds for the last 30 years. And our funds have been structured to acquire land, brownfield sites, contaminated land, but then not to vertically develop that land, unfortunately. And so what I've realized is that so much more value is created. I hope now you can see my slides. Let me know, Jimmy, if that comes up okay.
That looks great, Tom. Yeah, take it away.
Sorry to ad-lib there for a second, but so we're creating the East Durham Opportunity Zone Fund in order to invest in this market, which happens to be one of the best markets in the United States. I was given some background before, but I studied urban planning and I studied law, worked at Bain & Company for a while, and then I began acquiring contaminated land and cleaning it up. And that led to building 4 private equity funds over about a 20-year period in which we raised $2 billion of total commitments, and we acquired about 500 properties all over the United States and some in Europe. We would clean up the land and then we would sell it to other vertical developers who would develop it out. The problem with a private equity fund is that you're very constrained by time, and you also, in the case of our funds, we were not able to build out the land ourselves. So we realized that there were great opportunities that we were missing. One of those opportunities happens to be the picture that you see here, and I'm going to talk about this case study a little bit later. Let me orient you to our area. And I am not able to move this slide, just one second. This map shows the Raleigh-Durham Research Triangle area, Chapel Hill to the left, Durham at the top, and you'll see a red box highlighted there, and that's the assemblage that we're pulling together. We currently have lined up, we have an option, we have contracts options on over 135 acres there. We're looking at an additional 60 acres as well. In the center of Durham, you'll see a box. That's the American Tobacco Campus, the project that I'm going to discuss in just one moment. The triangle is Research Triangle Park itself. It's a huge engine of growth with the companies listed down to the left that you'll see on the lower left, and many others. And then Raleigh-Durham Airport in the middle, Raleigh to the southeast. 2 boxes highlighted there. One is the warehouse district where we developed the Citrix East Coast headquarters, a great project for us. And then North Hills, the box to the north there. We owned North Hills. North Hills is the greatest real estate development in the Raleigh-Durham market, probably in terms of overall scale. We actually owned the site. We acquired the site for $8 million. We sold it. It was a great deal for us. We doubled our money in a very short period of time, and we exited for $16 million. Well, I hate to inform you that currently the market value, the tax value of the property in that area is over $1 billion, and the market value is probably in excess of that. And the great developer who we sold to and who partnered with us in the acquisition, but we exited to, a great developer, Kane Realty, is continuing to develop in that area. So they were able to capture much more of the value than we were able to capture because they didn't have the kind of structure that we're talking about now creating through this Opportunity Zone Fund. This aerial photo shows the site, the site area, shows downtown Durham, and then one of the site areas that we've optioned, you'll see highlighted in yellow to the lower right. It's 2.6 miles from downtown Durham, 7 miles from Duke University, which is upper left in this picture, 4 miles from Research Triangle Park itself, and then about 10 miles from the airport. The picture in the middle shows a little bit larger project area. We also have options in that area. And then the highlighted different colors on the left show the different parcels that we actually have options on or we're in negotiations to acquire. So it's very unusual to be able to pull together such a huge assemblage of land in such a great market and at attractive prices. So why invest here? As I said, it's a great market, a lot of land in a great market. We got a good management team. This really all got kicked off by Matt Thompson. Matt Thompson went to Oxford. He started a millwork business in East Durham. He bought property there. He got to know his neighbors, and he realized that it was a great market. Things were changing there, and there was an opportunity for them as landowners to turn this into much greater value. We may not be able to acquire Matt's site because of the structure of the opportunity zone. We would love to if we can, but we're going to acquire the land that he has optioned all around that area and build out, through his leadership and really pulling this together, build out a great development. And then I described my background before. We're going to have an evergreen fund structure so that we are not required to exit a particular time. We won't have a predetermined time period for exiting. So we'll be able to take a long-term view, steward the long-term value of this property. And I want to talk about these three case studies that I mentioned before. The American Tobacco Campus, I showed a picture at the very beginning. If you look at the lower right, this is what I could have acquired for $7 million. I passed on this. I chose not to do this because we realized this could be a long deal and we didn't have the ability to hold for such a long period of time with the capital that we had at that point. So I passed on this deal around the year 2000. A few years later, it came back to me after Capital Broadcasting had bought this site. They asked us to join them because it had environmental issues and we're specialists in dealing with contaminated property in brownfields. And I passed again for a similar reason. Well, and at that point, we could have invested for around $10 million. It has turned into roughly $1 billion of value, tax value in this region. And if you think about it, the developer who participated in that probably picked up, let's say 10% of the total value created in addition to the value of the land. So on average, we're going to be buying land for a couple $100,000 an acre. That land in Durham downtown now or in Raleigh would be worth a couple of $1 million an acre at least. The built out value of a project like this or the others I'm going to talk about is probably in the $10 to $15 million per acre. And so the developer could earn, let's say 10% of that. That's another $1 million per acre. So there's a huge opportunity for asset value or for value growth here in these projects. North Hills in Raleigh, I did buy this site. If you look at the upper picture, we bought 30 acres, which was the old antiquated mall. We did the demolition work. It was contaminated by an Exxon station at the upper right-hand picture, corner of that. There was a foot of gasoline floating on the groundwater underneath this mall that we had to get out of there before we could do the demolition work. We sold it. We bought it for $8 million. We sold it for 16. John Kane Realty developed the vertical, which you see a picture of at the bottom, and then acquired all the property around it as well, which was a great thing to do. It includes office, hotel, retail, all the different product types, lots of apartments, current value in excess of $1 billion. And then the warehouse district in Raleigh, you can actually see my office that I'm sitting in right now, which I think has an arrow pointing to it in the upper left picture. It's sort of the right-hand side of the upper left picture. But we bought what you see at the bottom and for about $3 million, not in our funds, we did this individually. And we then built what you see in the upper right, which was an East Coast headquarters for Citrix, the computer company. And we ended up selling that, again, because we didn't have a capital structure like the capital that we're raising here. We needed to exit at some point. We exited from that deal. We probably turned $3 million into $20 million. It was a fabulous deal for us, don't get me wrong. But we didn't acquire all the property around us. Of course, that's every real estate developer wants to do that, buy the land that they've got plus the land that touches it. But if we bought the land that was around it, we would have built what you see in that upper left picture, the Dillon and the apartments beside it, fabulous development that was built diagonally across the corner from our project. So we realized through these experiences, either the ones that we participated in or the ones that we didn't, that having capital that could pursue a long-term vision for these sites was the way to go. So I talked before about our backgrounds and the team that we've assembled, including Olin, who designed the Apple site in California. Little is our local team lead, and Jewel Coulter's our engineers, and our compliance and legal talent shown there as well. And I'll send this presentation to any of you who want it. You can look at the details of it. This is our structure, open-end QOF structure, targeting QOF eligible sites. We're going to raise an additional parallel fund that will target the non-opportunity zone sites. So we're going to raise both, and we're going to develop in a manner that's consistent between the two so that everybody benefits from everything that happens there. $50 million target size with a cap of 100% return to investors initially, then 7% preferred return, then a catch up, and then different splits after that, standard management fees. We want to make it easy for investors to exit if they want to, either sell into the fund or sell into a third party. We will help, we'll do anything we can to facilitate that. New investors may join if capital is needed later. We're not going to start with any debt, but we will be able to use some debt to fund buyouts if we need to. And we're going to have annual appraisals so everybody will know roughly what the property is worth if somebody wants to buy or somebody wants to sell. So that's a little bit about our structure. If you want more information, please email us, info@eastdurhamopportunity.com, info@eastdurhamopportunity.com, and happy to answer any questions.
All right. Well, excuse me. Well, thank you, Tom. Thanks for the presentation today. I had a couple people chiming in the chat that it's a great location you've got. It is a fast growing part of the country, and it's in an opportunity zone, and it's located very close to that research triangle area. I'm curious, by the way, if anybody does have any questions, please do feel free to chime in the chat or in the Q&A, and I'll get your question over to Tom. I've got a couple minutes for some questions here. My question, Tom, to you is, what do you anticipate the property will actually look like in a few years, and when do you anticipate the completion date might be? Is this going to be largely multifamily, or is it going to be mixed use, or what?
It'll be mixed use. You know, what we've seen in these other projects is you really need to follow the market lead, see what the market wants. There's been a fair amount of office demand in these areas, surprisingly, or some people might be surprised by that. So we think it's possible we would see demand for office. We would love to have some sort of high-end, flex space or industrial, if we can, for employment purposes. And of course, there's a lot of demand for apartments. I'm sure that'll be part of it as well. Retail is bad everywhere, but at least convenience retail and grocery stores would be a likely use as well. So it'll be all the uses that are possible.
Yep, understandable. Question just came in here. What's the projected net equity multiple?
It depends on the whole period, obviously, but we're going to buy land for $200,000 an acre, and we think it's going to be worth $2 million an acre. Now, it's going to take a while to do that. We're going to have some costs associated with that, so I don't want to say 10 times, but I think it's going to be certainly more than 2 times. We think the multiples would be pretty high in this fund. Good
answer. This one just came in from Saudi. Saudi asks, what is the current / projected industry growth in the area, and what industries provide employment in the area?
Mm-hmm. So this is a technology area of the U.S. It is really the leading area for clinical trials, drug trials. It's the U.S. headquarters for GSK, GlaxoSmithKline. A lot of drug companies, drug development, drug testing. In addition to that, when I say drug testing, I don't mean what it sounds like. I mean drug trials. And in addition to that, there's a lot of IT related tech as well. And then there's NC State, is an engineering school, textile engineering, huge textile innovation area. UNC Chapel Hill, Duke University, we got great universities, just enormous growth across all of the sort of leading economy areas.
Fantastic. Okay, well, I think we answered all the questions that we had come in here. Here's one more just came in right now. Does the fund have a closing date?
We would like, we will have our first close by the end of the year so that people can get in before the end of the year. And then we'll continue to raise after that to the extent we need to continue raising capital.
Very good. Okay, well, I think that does do it for the questions we had come in for this one. Tom, thank you for joining us today. And for investors out there who are interested in learning more about the East Durham Opportunity Zone Fund, I've posted some links in the chat pane there. You can head over to eastdurhamopportunity.com or email info@eastdurhamopportunity.com. Tom, thank you very much for participating today. Appreciate it.
Jimmy, thanks so much. Great.
Absolutely.